Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. Great to have you join us. First off, now let's kick off with the market. See oil prices edged up today as expectations that OPEC Plus may agree to a large cut in crude output when it meets tomorrow. That actually outweighed concerns about the global economy. Brent crude futures rose by 47 cents to $89.33 per barrel. After gaining more than 4% in the previous session, U.S. crude futures rose by 31 cents, or about 0.4% to $83.94 a barrel. The benchmark also gained more than 5% in the previous session. That's its largest gain since May. Oil prices rallied on Monday on renewed concerns about supply tightness. Investors expect the Organization of Petroleum Exporting Countries and its allies, known collectively as OPEC Plus, expecting them to cut output by more than 1 million barrels per day at their first in-person meeting since 2020. That's tomorrow. And to the grain market now, Chicago Board of Trade wheat futures settled lower on profit-taking Monday after approaching a 3-month high reached during the previous session, according to traders. The setback in wheat futures came after reduced official estimates of the U.S. harvest, and heightened tensions in the Ukraine war put renewed tension on global supply risk. Soybean futures SV1 meanwhile ended higher after falling to their lowest in about 2 months earlier in the session and dropping last week Friday when the U.S. Department of Agriculture issued data on quarterly stocks report. And one of Nigeria's leading electricity power plants, Geregu Power PLC, is set to list on the main board of the Nigerian Exchange Limited. According to a statement released on the stock exchange's website, about 2.5 billion ordinary shares of 50 kobo each at 100 naira per share on the exchange will be listed by introduction. Geregu Power will be the first electricity company, generation, transmission, or distribution that will be listed on the exchange in Nigeria's history. And the recurrent breakdown in Nigeria's power supply has undoubtedly become a familiar and worrisome trend as the country literally shuts down when it occurs. This issue is even more troubling, particularly as it comes amidst assurance of improvement by the Nigerian Electricity Regulatory Commission following the ongoing reforms in the power sector initiated and supported by the government, the central bank, and other stakeholders pushing for improvement in the nation's electricity industry. This report takes a look at the economic impact of the incessant collapse of the national grid on businesses and livelihood in the country. Do take a listen.
After recording more than 200 partial and total system collapses since January 2010, Nigeria's national electricity grid suffered yet another break in power supply last week, bringing the total number of grid collapses on record this year to 8. The incident, which threw the entire country into a total blackout for several hours, is becoming a trend, even with the recent privatization of the power sector and disbursement of about 1.3 trillion naira by the central bank in the last 5 years to support the sector through the generators or discos in reducing the challenges of electricity supply.
Are you happy with where we currently are with the state of electricity in Nigeria?
I am not, because I've identified that no country can develop without infrastructure.
As a result of the frequent collapse of the grid and epileptic power supply in the country, the Renewable Energy Association of Nigeria says such breakdowns cost over $25 billion in economic loss annually. At the same time, businesses are estimated to be spending over $14 billion annually on private fuel generators.
The way they are giving us lights now is not long as same thing before. That's the way we haven't lights before.
It has not improved from the formal time before they took break of 8 to 6, yes.
Although the national grid is gradually recovering, the issue of its frequent collapse continues to be one of the major infrastructural challenges for successive administrations since the country's independence.
The supply that goes down on the grid, it triggers some response. Some started to trip down, and that also causes the whole system to go down. So we are on top of it. We have recovered it now. The grid is back. We are trying to get more megawatts to push on the grid.
The federal government says it's making efforts to change the narrative. as the CBN initiates power intervention programs to boost electricity supply in the country, such as the 213 billion naira Nigerian electricity market stabilization facility and the 140 billion naira solar connection intervention facility. These initiatives are all targeted at providing better electricity supply for Nigerians.
And to our first conversation now, we'll be talking about brain export. Might sound kind of bizarre, but the focus is actually human capital. In a report by PwC titled Nigerian Brain Exports, the Optimal Path to Growing the Nigerian Economy, recently released by PwC there. We're going to break this report down now with Andrew Nevin, partner and chief economist, PwC Nigeria, joining us right there via Zoom. Great to have you on the show.
To be here. It's always a pleasure to be with Channels and with you, Laddie. Thank you.
Always a pleasure to have you now. So when I hear brain exports, brain drain, kind of comes to mind. And I'd like to know, what are your key findings, from your report?
Yeah, so let's just start out with the basic reality here. We need to import things in Nigeria. We can't produce cell phones. We can't produce automobiles. We can't produce machinery, we can't produce computers. Those are all things that we need in the next medium term that are not to be produced locally. So we need FX. So what is a viable source of FX for Nigeria? Traditionally, of course, we've relied on oil. There's been essentially a collapse on that. The production of oil, at the time I've been here, has dropped from about 2 million barrels a day to 1 million barrels a day. And given our oil subsidy, it's no longer really a source of FX. So then you ask the question, can we export physical goods? And we make the argument that, in fact, and you just made the argument as well for us, this country is not competitive in exporting physical goods. So when we try, because of the electricity issues, because of the infrastructure challenges, because of the ports. I mean, you might have seen in the press recently, there's over ₦1 trillion worth of goods rotting in the ports of the Apapa because it's not being cleared off of that. It just shows you the difficulty with that. So we are not competitive at exporting physical goods. But there's a very positive side to the story, because actually 70% of the world's GDP is in services. And what we can export are high value added services with people remaining in Nigeria. This is already happening even by individuals, but also at scale in Nigeria. And that's the only strategy that's going to be viable for our export. So that's what the paper discusses. And we put the target, we'd like to have 2 million Nigerians in Nigeria working in global value chains, but producing FX in their communities, buying houses, supporting their families, sending people to education in Nigeria. So this is complete opposite of the brain drain. This is taking advantage of Nigeria's incredible brain power, the brain power of the youth, but with people remaining in Nigeria. So that's the core of the strategy.
So how do you export these brains without the people actually leaving the country?
Well, I mean, this is something that started in the 1990s, and India was really the first country to do this with business process outsourcing. Today, India has a surplus of $100 billion a year in services. But what's happened with COVID is that, of course, we found out there's many more ways to deliver services remotely than we thought. So more and more jobs can be done remotely. And we now have examples in this country where we have companies delivering accounting services, delivering legal services. I learned yesterday in one of my discussions, delivering architecture services while people remain in Nigeria. So this was always there, and we had started in the mid-2010s. But with the COVID, it's really accelerated and making it more acceptable. So what we need to do as a country to solve our FX, our balance of payments problems, growth for prosperity, is embrace this trend on that across all the spheres. And of course, we already export services like Nollywood and music, very high value added financial services, but it needs to be expanded across the sphere, and particularly around things to do with the digital economy. So this is coding for employment, business process outsourcing, animation, where there's a huge number of global jobs that Nigerians can fill.
Right, and talking about this issue of brain drain, in the country, we have a huge population, and we've relied on oil, for the longest time. And I saw something interesting in your report there. It says Nigerians in diaspora actually bring in more money than oil. And I'm wondering, how does that, can you break it down for us?
Well, I think people sometimes get confused with the gross numbers. So, I mean, in a typical year, Nigeria is often exported about 50 to 60 billion US dollars worth of oil. And of course, the official number from, I think, the World Bank database for the diaspora remittances is about 25 billion US dollars. It dropped a bit during the COVID era. Of course, that underestimates it because of the informal flows. But what people forget about is when we sell 50 to 60 billion US dollars worth of oil to the world, that doesn't mean 50 to 60 billion US dollars worth of money comes to the country. A lot of the expenses are in US dollars. It never enters it. I can tell you the expats that work in these projects, they're getting paid offshore. That money, very little of it enters Nigeria. If they have debt or they're making interest or dividend payments out of the oil proceeds of the company, that's not coming to Nigeria. That's just being paid offshore. So that 50 or 60 billion US dollars doesn't enter. The difference with the diaspora remittances is the diaspora's already paid for all the expenses. This is a net earning to the country. They've already paid their rent or their home ownership in their country. They've already paid for the food in the country. They paid for the education. They paid for healthcare. What they're sending is what's left over, and it's the net amount that comes into the country. So, in fact, in terms of the impact on the Nigerian economy, the diaspora remittances are already bigger than the oil.
Quite interesting. And tell us about the high-end global value chain, because it also says you recommend placing Nigerians in high-end GVCs. How does that actually work?
Well, let me give you a couple of examples of Nigerians in sort of the high-value global value chain. So I think the most valuable, people may argue because he was actually born in Greece, but I still think of it as Nigerian. Giannis Antetokounmpo, of course, is the superstar basketball player of the Milwaukee Bucks. I mean, he's worth at least $500 million to $1 billion as an individual, exported from Nigeria, essentially. I was watching the game last night, Nottingham Forest versus Leicester. Very painful for me. I wanted Taiwo Awoniyi to score. But we know the footballers, when they play in the Nigerian Professional League, may earn $30,000 at the most. A few of them, when they're in the Premier League, when they're Bundesliga, I mean, they have 50 million, 60 million euro transfer fees associated with them. So that's an example of Nigerians being inserted into high-value global value chains. But for millions of Nigerians, they can be coders for employment. So it's rather than working for a Nigerian company or struggling to get a job here, there's a shortage of workers around the world because of demographics. They need educated young people to fill these jobs. There's 28 million software developers in the world. The number is going to 45 million software developers. There's no reason that we shouldn't have close to 2 million of those software developers in the next 10 or 15, well, 5 or 10 or 15 years. And it's happening already on that. If you contrast this with, if we always talk about manufacturing, but in the low-end manufacturing ladder that South Korea followed or China followed. But the problem with that is, I mean, it's not like the wages in low-end manufacturing are that high. And why would we ask Nigerians to work at low wages in low-end manufacturing, and with all the difficulties we know with power and with infrastructure, with the ports and with the government, when they can insert themselves now into high value-added value chains? I mean, if you think about Apple Corporation, the people assembling the iPhones in the Foxconn factories in southern China don't earn very much. The people developing the software to support the iPhones, whether they're in Silicon Valley or in Nigeria now, are earning a lot more. So why would we go into low-end manufacturing? Let's just skip that, leapfrog it like we've done with the mobile telephony, for example, like we're doing with our banking system. Let's leapfrog to the highest value-added services that we can deliver globally around the world. And that will lead to a much more prosperous and a cleaner Nigeria.
All right, tell us about other case studies. You know, you did mention India. You know, tell us about other, case studies of countries that actually, rely on and getting, the benefits of brain exports.
Well, India is the best example. As I said, they run 100 billion surplus, $100 billion US surplus in services. They run a deficit in manufacturing. They clearly decided that from a economic strategy viewpoint, that exporting high value-added services is the optimal strategy, and it's working very well for them. Another country that may surprise you that's starting to do more of this is actually Kenya. And when we looked into it and we cited in the paper, on a proportional basis, they already have more workers in global value chains working remotely from Kenya on a proportional basis than Nigeria does. So they're down the track. Philippines has done a very good job. Of course, they've traditionally had this model of exporting workers in the diaspora, but particularly for low-end jobs, which is not always satisfactory. They're now rotating more to the business process outsourcing, the coding for employment in the Philippines. So those are three countries that have decided this is really the way to go. But I mean, at a very basic level, what's the most valuable complex asset on the planet? It's the human brain. What's the most valuable asset for Nigeria? It's Nigerian brains. So we should be selling Nigerian brains rather than selling oil or rather than selling low-end manufactured goods.
And, talking about, selling Nigerian brains, now we know education is a major, factor that helps to actually improve the amount of brains you're actually exporting. And looking at the situation here in Nigeria, we're seeing what's happening with ASU, and the federal government. So it looks like that is going to impact how much we can actually export going, in the future.
No, absolutely. I mean, this ASU strike is a complete disaster for the country. I mean, we've taken our most valuable asset and then we're reducing it very rapidly by young people not being in university, not getting the skills they need. But the good news is I think there are a lot of other alternative providers that are coming into the marketplace to provide education that's more relevant and better leads to employment than necessarily the Nigerian State University or federal government university system. I'll give one example. Nexford University, fantastic online university run by a brilliant Nigerian. They just did their second graduating class, I think, and their graduates, they pay a lot less than even going to Nigerian university, or about the same amount when you take all the fees. And they're coming out with more marketable skills. But also, if you think of coding for employment or even business process outsourcing, you don't necessarily have to have a university degree. So what you're seeing emerging now are programs that can take a WIAC holder, and in a year or two, they are then skilled up in a way, not with a university degree, but to be able to enter these global value chains. Edo State, His Excellency Governor Obaseki, is executing this strategy. They've already got their first cohort of coders who are employed. I believe they're aiming for 35,000 people coding for employment. Of course, that comes roughly in par with our number. If all 36 states do 35,000 people, then we're talking over 1 million people coding for employment. But that's another key aspect of this whole strategy is it's not dependent on one state or a highly centralized system. It's millions of individual Nigerians finding roles in these global value chains, companies in Nigeria, multiple companies building up these global value chains where people play the role in exporting their Nigerian brains into it. And that makes it a much more robust strategy than relying on large manufacturing infrastructure. And to be honest, people that have invested in hard assets in this country, all the 14 years I've been here have really suffered on that. You looked at your segment on the electricity industry. Why would anyone invest in the electricity industry? Why would anyone invest in manufacturing right now? That you are going to lose your money. But if you invest in exporting services, I think it's going to be viable.
Right, and what would you say, the government now, talking about spending, where should they concentrate, that spending? Talking about, okay, the next government coming in, where should they concentrate spending, when they get in?
Well, I mean, we've said for years, and I'll repeat it again using the brain capital term, let's invest in the brain capital of Nigerian young people. So it means health and education, and particularly preparing them for insertion to these global value chains from an economic viewpoint. That's where we should be spending our money. I mean, we've been very negative on the foil subsidy. The number just grows and grows and grows. And, we do think it's kind of in its last death throes, the foil subsidy. It has to go. Why would you invest in subsidizing consumption? I read a very good article for our PwC Journalist Awards, which we're doing this week, that talks about the scale of the foil smuggling into countries, neighboring countries. Why are we investing the scarce resources of the nation to support this smuggling activity that benefits other nations, and yet we have the ASU on strike and no education and no ability to build that brain capital to earn prosperity for Nigeria? It doesn't make any sense. So our advice again is let's invest in Nigerian young people. If you invest in Nigerian young people's brain capital, we're pretty sure everything else will take care of itself in this country.
Everything else will take care of itself. Thank you so much, Mr. Andrew Nevin, partner, chief economist, PwC Nigeria. We need to get more brains exported going forward, I guess. Thank you so much. All right, so that was Andrew Nevin there, partner and chief economist at PwC Nigeria. So we're going to be taking a break now. When we come back, we head to the commodities space. That's the moment. Just stay with us. Welcome back. Still watching Business Morning live on Channels Television. Now for the commodities market update, we have Desola Simone now joining us right there from Reading. Great to have you, Desola. So it's still inflation. Well, we're still talking inflation. We're talking about inflation the whole of 2022, and it's still the major topic now. And the rate hikes have come, but we're still seeing inflation trend upward. And your next prediction for next inflation now is that it's going to go even higher.
Indeed, Iladi, yes, thank you. So the National Bureau of Statistics is scheduled to release the inflation numbers for September on the 15th of this month. We forecast that inflation is going to trend upward by about 0.4 percentage points to 20.9%, up from 20.5% in September. And this is driven by the usual factors. One is the exchange rate pressures. Two is the higher cost of logistics. For example, if you look at the prices of diesel, that's remained elevated. At the start of the year, it was around 300 naira per liter. Currently, it's around 700 to 800 naira per liter, depending on where you go. So we forecast, and in addition to that, we also, one of the key drivers is also going to be the persistent supply disruptions, supply chain disruptions. But I think what is important to notice is that the rate of increase is slowing down. So the pace of increase in headline inflation is slowing down about 0.4% this month. And this could mean that, maybe this could mean that, inflation is slowing down, and we could see inflation reach a point of inflection in the coming months. If we look at other sub-indices, look at core inflation, we forecast core inflation to also trend upwards, as well as food inflation. But on a month-on-month basis, our forecast shows headline inflation is lower on a month-on-month basis. And this is mainly driven by, I think, partly driven by harvest, the effect of harvest, as well as price resistance.
Are the rate hikes kicking in at this point?
Not yet, Ladi. Partly, so if you look at the inflation for Nigeria, I think there are many factors that are affecting it. One is that we're in an election cycle, right? So that is also going to drive inflation going forward. While, the rate hikes, currently yesterday, I think about 400 basis points, while that might have some effect, we are still seeing exchange rate pressures, we are still seeing exchange rate pressures. We are still seeing what is it now? Higher energy costs, logistic costs. All of these costs are it's going to be like a tussle of war, and I think that those costs will still keep inflation elevated. However, I think after the election, around H1 next year, yes, we should begin to see inflation really trend downwards.
Yeah, that'll be great to see, because I saw a forecast from an expert in the U.S. They're actually predicting that next year U.S. inflation is also gonna, come down, and they also advise, the Fed to make the next Fed meeting, the rate hike should be the last one that they will do, so that they can actually get what's actually going to happen next year. But do you see these rate hikes actually stopping anytime soon? And also bringing it down here to Nigeria, the MPC too, it says they're going to keep raising, if that's what it takes. Do you see them stopping at any point?
So we are in a tightening cycle, right? I think that's the first thing to just notice. We're in a tightening cycle globally. And I think in the United States, we are beginning to see inflation. And also in the UK, we're beginning to see inflation reduce slightly. For the month of August, inflation reduced by 0.2%, both in the UK and in the US. And I think that's partly due to the aggressive hikes in interest rates. In the last meeting last month, the US Fed increased interest rates by around 75 basis points. And this was the third consecutive increase this year. In the UK also, we saw an increase by 50 basis points. So I think that, and also the US Fed has said that they're going to be quite aggressive. They are going to do what it takes. If you look at these countries, the inflation in these countries currently is around, in the UK, is around 9.9%, and in the US is about 8.5%. But if you look at their long run expectations, it's around 2%. So I think it is you can expect some more aggressive increases in interest rates. until inflation is closer to the to the long run inflation expectation of around 2%. In Nigeria also, like you said, we saw 150 basis points increase at the last meeting, and that brings cumulatively 400 basis points. I do not expect that the MPC is going to increase interest rates any further this year, but I think if inflation does not change, and if inflation does not trend downwards, I think in next year, perhaps after the election, we might still see some tightening in Nigeria.
Right, it'd be great to see the tightening actually end at some point, hopefully next year. But now let's look at the oil market now. We're seeing, prices trend upward this morning, and obviously it's all about the OPEC meeting tomorrow. How are you seeing it?
So what's happening really is, before now, let me just give some background. Before now, we saw prices drop quite sharply, mainly due to the tightening cycle, which raised concerns about a recession. We saw also lockdowns in China, which also raised concerns about global economic growth as well as oil demand growth. And in the middle of all of this, we saw this dollar really strengthening against the basket of currencies. And usually when this happens, it makes dollar-denominated commodities are more expensive to holders of these other currencies, so that affects demand. So in the previous weeks, we saw a lot of demand side factors, driving oil prices, and we saw oil prices decline quite sharply. I mean, oil price currently around $88 per barrel. But last week, there were some rumors that OPEC is likely to cut production by around 1 million barrels per day. I mean, when I read that, I thought OPEC is barely meeting its production quota. I mean, last month, OPEC Plus missed production quota by around 3.6 million barrels per day, and now they want to cut. But the idea is two main reasons, right? One reason is to kind of support prices, because prices have been quite declining quite sharply. But also another reason could be to bring the production closer to the targets, right? So it is not like, so that they are not missing the production targets by much. So the expectation is that OPEC is going to actually agree. That is the expectation, that they're going to agree to cut production by around 1 million barrels per day. I think that is going to support prices going forward.
Right, and talking about the production cut there, looking at Nigeria, we're not actually meeting the target. So how does that even impact us in any way?
I think this is not going to be good for Nigeria. First, I was looking at the numbers for last month, for September. Nigeria produced less than 1 million barrels of oil per day. And Nigeria's target is around 1.8 million barrels per day. I mean, we know the usual factors that are responsible for that. But I think that there will still be a little bit of room for Nigeria to increase its production. But definitely Nigeria is not going to be happy with it. But I think there will be room. I don't think Nigeria's new production quota would be small. I don't think it will be small. I think it will just be marginally lower than what it was before, or even at the same level as it was before.
And we see the Naira taking a beating again in the parallel market, and obviously election campaigns are kicking off at this point. What can we expect for the Naira at the end of the year?
That's a tough question, Ladi.
Yeah.
But let me give you some. Let's look at what's happening. So currently, Ladi, the price, the Naira is around, I think, at the official market is around 430 Naira to the dollar, but the black market is around 730 to 740. So you see there's a big gap there. One of the factors, Ladi, let's look at the supply side. We are seeing higher oil prices, right? But like I mentioned earlier, Nigeria has been unable to take advantage of the higher oil price environment due to vandalism of oil infrastructure, oil theft. I mean, many oil companies, many IOCs have declared a force majeure on many of their export terminals, and that contributes to Nigeria's lower oil production and lower oil revenues. So that's on one hand, lower oil production, lower oil revenues. On the other hand, Nigeria's subsidies, as you know, we are in the high oil price environment. The subsidy also is higher. That is the gap between the imported, the landing cost of PMS and the gap between the landing cost of PMS and the pump price becomes larger as the price of oil in the global markets rises. So Nigeria's import bill becomes larger. So the revenue that accrues to the government from exporting oil is even smaller. In addition to that, hot money, foreign portfolio investment used to be one of Nigeria's big source of foreign exchange earnings, but now because of quite aggressive hike in interest rates globally, as well as the tighter financial conditions globally, the foreign portfolio investment is drying up, for lack of a better word. Similarly, foreign direct investment, we are seeing a decline in foreign direct investment. So as all of this is happening, on the demand side, demand is not reducing. I mean, we just finished this season, August and September was like school fees season. A lot of Nigerians moving abroad, even more than the usual average. I looked at some numbers from the UK the other day. As at June this year, the UK had issued around 65,000 visas for international students from Nigeria. To give you context, last year was around 8,000, right? So all of those people are going to need dollars to pay for their school fees. So there's huge demand for FX to pay for school fees, and that's just the UK, right? We also have huge demand for manufacturers preparing also for December. And so all of these factors are mounting pressure on the exchange rate and the external reserve. Now, in addition to all of this, we are in an election season, right? So there's also demand for campaign and all of that stuff. So while, as the school fees season has kind of passed, I estimate that, the Naira will strengthen a little bit, but we are going into another season of high demand in anticipation of the festive season, Christmas, but also the election. So I think the Naira is still going to be quite volatile, taking into consideration that our exports, our dollar inflows is not increasing remarkably. I mean, also there's news that, the federal government is considering to reopen this Trans-Niger export terminal. If it opens that and is able to export, I think around 180,000 barrels per day, I think that would help with the FX inflows into the country.
Right, we need more demand for the Naira at this point. All right, let's look at the agricultural market now. We see cocoa, we're seeing the output is not looking so good for 2022, 2023. What's happening there?
So I think the big idea for Nigeria was excessive rainfall in the southwest Nigeria. And what happens is with the excessive rainfall, it significantly increases the moisture of the soil, which becomes conducive for this black pod disease, which is a disease that ravages cocoa harvest. And that is what is happening. So in addition to that, we're also seeing, because of the excessive rainfall, the cocoa farmers are unable to get enough sunshine to dry their cocoa, their cocoa harvest, which also affects the quantity, the size of the pod, but also the quantity. And that is why we are seeing lower output from southwest Nigeria. But on the other hand, we are seeing big harvests coming out of Ivory Coast and Ghana. So what's happening is the huge harvest coming out of Ivory Coast and Ghana is kind of outweighing the lower exports from Nigeria. And that is why we are seeing that globally, the price of cocoa is trending downwards.
Right, I guess there'll be pressure on price with this output issue there. Thank you so much, Desola Simoni. That's our FDC analyst there, right there. Join us from Red News. Great having you.
Thank you for having me.
All right, we'll take a moment now. All right, now let's head on to the markets now. Talking about the FT's market right here in Nigeria. We have Anita now to give us the details. So, Anita, well, September was quite.
Good morning, Ladi.
Yeah, good morning. Quite a month for the NGX. Talking about the local bourse here, it wasn't that great, really.
Well, let me tell you how the month. Actually, the final week of September, it turned out just a bit flat, 0.01% down. But the last trading day actually was in the green. It was up by 0.12%, which means we gained about 32 billion naira. But in terms of the quarter, because we're now in a new quarter, today is the very first start of the day of the month, we lost more than 1 trillion naira.
Right.
So, well, with that being said, let's take a look at what the big board painted at the close of last week. This is a review of the performance in the final week of September. It was down by 0.01%, which is what you see here, 024.16% points for the all-share index. At the same time, the market value was down. It was actually up by 0.03%. Take a look at the sectoral performance board here. It's kind of a mixed picture, but these were the reasons why the market was in a flattish negative close. The banking subsector, the consumer goods subsector, as well as the insurance goods subsector components, they led the market to the market's year-to-date and month-to-date return. Month-to-date is down by 1.6%, while year-to-date is 14.8% reduction. Now, the volume in terms of activity charts, volume was up by the volume was up by 78.5%, while the value was also up by 10.3% week on week. Now is an official start of the first trading day of October, as well as the final quarter, the Q4 trading session. So that's it for the market. So far, the market it lost 430 billion yesterday, no thanks to profit taking by investors. And at the same time, the final quarter, the third quarter, more than 1 trillion taken off from the market cap of the market. Now let's move over to the smaller unlisted securities market. On the swingers, on the upper side, it was up by 1.69%, which translates to about 16 billion naira gain just last week. It has been oscillating in between the sell pressure as well as the bargain hunting. So that's it for that market. Let's take a look at the total volume of transactions. The total volume of transactions, it actually declined by 97% to what you see here, 571,164 securities traded for last week in just 46 deals. So that's it for that small unlisted securities market. Now, if you take a look at the other picture, we had the top gainers there. The top gainers there, we had some small, the likes of Niger Delta Exploration Company. So that's what made the markets to, make some gains. We had more than, I think, about 3 gainers there for that market. But now, if we have our guests to talk about, our analysts to talk about the market, let's talk to Peter Abe. He's an equity trader at Stanbic IBTC Stockbrokers. Good morning, Peter.
Good morning.
Okay, now it's official start of the trading day for October. So now, can you give us a review of the week? Give us more insight. Yes, we have. Tomorrow, we're gonna see the listing of the first power company on the NGX. But before that, give us your taste of the market last week and the outlook for the fourth quarter.
All right, thank you once again. Thank you for having me. Last week, market was fairly quiet. We saw quite a few of some names also bearish as well. In the banking space as well as in some consumer names, we saw some sell-off. However, the markets closed just on gained 12 basis points on Friday, just to close the quarter and also to close the week. But if you look at what the markets performed for the quarter, the market lost 5.39% quarter on quarter, and year to date it has gained 14.8%. That gain could be attributed to most of the gains that we had early in the year.
Okay, so now tomorrow, I know you may not have much information about this, but so far, when we talk about the market's value being reduced, we're expecting that tomorrow the NGX, the shares Geregu Power will be listed on the exchange at 100 naira per unit. It will be listing about 2.5 billion ordinary shares on the exchange, and that is expected to boost the market value by $750 million. So what's your take on this?
It's actually a welcome idea. Like you mentioned, this is one of the first power company that will be listed on the Nigerian Stock Exchange, and that tells us that is a sign of good things to come. This will be like the second name getting listed on the Nigerian Exchange this year already. We had Boa Foods early in the year, and this is the second one. And it's going to boost the market's capitalization, like you mentioned, and also looking at the few information we have on the company, we believe it's going to be a good one for investors to put their money in, and it's a good one for us to have even in this last quarter of the year.
Okay. So thank you for that analysis, Peter. And of course, as usual, we keep our eyes on the market. So, Ladi, you heard it all?
Yeah, all eyes on Gergu listing.
Gergu, yes.
100 Naira. I wonder how that's going to perform. We'll keep tracking that, but it's a good addition.
If you ask me, I think it's a good buy, but I'm not a trader.
Right.
We'll leave it to the traders to decide.
All right, let's see how it goes. Thank you so much, Anita.
Pleasure.
All right, that was the market review now. So we'll be heading to London right after this break. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channels Television. Well, we're heading to London now. We have Juliana standing by right there. Great to have you, Juliana. So it's still energy talks right there in the UK. And now we see Ofgem is warning that UK is facing a significant risk of gas shortage. And last time I checked, the UK is 41st in the world talking about proven gas reserves. What's happening?
Good morning, Ladi. Well, yeah, this is, to be honest, I think more of a scaremongering headline, which I think all of our viewers that living in Britain have become used to now. Scaremongering because there is just so much going on at the moment. But of course, as it pertains to the illegal war in Ukraine by Russia, people should be scared. But we have heard this before. We know that Britain is a government, should be a government, and should be a country that always prepares for a worst-case scenario. That's what good governance is all about. And there have always been, since February, discussions about what is going to happen if Russia does turn off the taps. It is going to be very difficult in the winter, and that's what this story is about. I believe the Times newspaper have obtained a leaked letter that was written by Ofgem, the energy regulator, basically saying that things could get really bad in the winter. And that's because although we don't solely depend on Russia for our gas, we do depend on connections via Norway. And then, of course, we do have our own supplies. Britain as well have controversially lifted the ban on fracking, which enables us to get shale gas from underneath certain regions within the UK. It can cause earthquake tremors, but the British government said nothing to see here. They're going to go forward and do that. But the leaked letter does say that, of course, there are going to be difficulties in the winter. But then at the bottom of the letter, it does say that they are prepared just in case. We've got to be careful with some of these scaremongering tactics. But nevertheless, there are issues that the British government will have to face.
Right, and it's great that Ofgem is actually prepared for whatever happens. Let's look at the market now. We saw that the pound, got a nice boost yesterday from the tax rate U-turn, by the finance minister there. But it looks like the markets are still quite jittery at this time.
Yeah, they are still quite jittery, and it's been a terrible past 4 weeks for Liz Truss, the Prime Minister. She's currently at the Conservative annual conference in Birmingham. This should be her crowning glory. It's supposed to be like that for any leader, as it was for Sir Keir Starmer, the leader of the opposition Labour Party in Liverpool a couple of weeks ago, but it's just not been that way. There has been screeching U-turn after screeching U-turn. Yes, I think the markets, did breathe a sigh of relief yesterday when about 24 hours ago, the Chancellor did decide to stop the abolition of the 45p tax rate for the 1% wealthiest in this country. But there are more U-turns expected. Kwasi, the Chancellor, did give a speech yesterday saying that he's going to bring forward again the fiscal announcement that was supposed to be in April. Then he said he was going to do it on the 23rd of November. Now we're expecting it as early as next week. And there is just no confidence in this government at the moment. It's been less than a month since they've been in power, and they're just not looking credible enough. So yes, there was a little bit of a relief rally. I think yesterday the pound was worth about $1.11, but according to Standard Chartered and the Bank of Canada, they're expecting before the end of the year for the British pound to lose more than 10% of its value. So we're talking about parity with the US dollar or even less, which, you know, a couple of years ago was completely unthinkable. Before the Brexit referendum, £1 was worth about $1.45. That's just how low it's dipped in recent years. So I think now a lot of investors, they're just looking to see what Liz Truss says next. The next row brewing is the fact that she is thinking of cutting welfare benefits, not cutting it literally, but Boris Johnson did say that he was going to lift it in line with inflation, which we know is double digits, and now it seems as if this Conservative Party are U-turning, so not looking great, especially at a time where now we've got Conservative backbenchers asking for the Prime Minister's resignation.
Yeah, quite interesting times in the UK, but we'll keep eyes on the British pound there. Thank you so much, Juliana, for the update. All right, that was Juliana there giving us the updates from London. Now, let's head on to the markets now. Talking about the cryptocurrency market there, we see it's still extreme fear this morning. Talking about the fear grid index showing the sentiment in the market. We see it's 20 points, still quite a jittery market we have right there. Let's look at the market cap. We see it's about $946.29 billion. That's up about 2.00%, and we see volume traded up 8%. We're getting more volume this morning. Now, Bitcoin dominance, 39.86%. Let's look at the price of Bitcoin at 8 a.m. this morning, about $19,785. That was up 3.10%. We're seeing some buying pressure with Bitcoin in the market this morning, and we see volume traded there, $28.93 billion, and we see price of Ethereum there. That's trading at $1,337. That's also up 3.58%. So we're having quite a nice market talking about the crypto space, even though it's still extreme fear. Let's bring in my guest now, Adeni Olokboroku there, coming live there from right there in Lagos. Is joining us via Zoom. Great to have you on the program.
Yeah, great to have you on the.
Yeah, so yesterday, Kim Kardashian was trending, you know, in the crypto space after the SEC and the U.S. fined her about $1 million for promoting a crypto project without disclosing that she was paid for it. That's all we've been hearing even up till this morning. What does this mean for the industry?
Yeah, it has a lot of ramifications for the industry because it means that celebrities won't be able to promote projects without explicitly telling their followers how much they are paid. She actually got paid $250,000 and she was fined $1.2 million. That's crazy because the amount she received was like 3 times the amount she was fined. And it's very rare for you to see that kind of scenario where you collect a particular amount to promote and you are fined like 3 times the amount.
Yeah, quite interesting. And do you think other celebrities now would want to disclose if they're paid or not before promoting, you know, any project in the industry?
I think they have no option than to do that because I'm sure that the SEC targeted Kim Kardashian due to her status as one of the biggest celebrities. And that's like a warning to other celebrities that are endorsing crypto. She actually promoted the project called Ethereum Max, and the project is 97% lower now than the period where she promoted it. So obviously, everyone needs to do their own research when you're promoting a project. If not, you might face the wrath of law enforcement agencies.
So I guess the problem was not her promoting it, but not disclosing that she was actually paid, you know, by a project to actually promote it. That's quite interesting. But looking at the market overall, it did not react negatively to that news. We're seeing, you know, some nice price movement, talking about Bitcoin and the altcoins. How are you seeing it?
Yeah, I'm seeing it the same way the market is seeing it, in the sense that we are in a period where the market is trying to find the right balance, where you have the price of Bitcoin at $1,000, and the price of Ethereum at $1,300. I personally feel that the price of Ethereum is actually like lower than its major price. We are yet to see that bounce from the merge that occurred some few weeks ago. So I'm expecting that in the coming weeks, as the merge continues to as Ethereum continues to evolve, we are going to see like a positive market movement. I also saw that the fear greed index is about 20 points out of 100. That's like many people are scared of the market for right reasons. But you know that the crypto space goes beyond logic. We might get the next major thing now. It might be a degen from NFT or something like that just sparks the next bull run. So I'm not really surprised because we've not had the news that we had last year where we're getting institutions buying, where we had Tesla announce that they were going to accept Bitcoin, AMC, Bank of America, and all that. I'm sure that when we start getting positive news about Bitcoin and the crypto space, the markets will definitely rise.
Quite interesting. Well, we'll keep watching that market. There's still macroeconomic headwinds out there that could actually hammer this market. Thank you so much, Adeni, for coming on the program. It was great having you.
Thank you.
All right, that was Adeni there, giving us the crypto evangelist, telling us what's happening in the market. Well, that's it for the show today. Don't forget to join us at 1:30 p.m. for Business Incorporated for more updates and developments in the world of business. Remember, you can also watch the show again on our YouTube channel. Just search for Channels Television on YouTube and slide over to the videos, and you get all other videos right here from Channels Television. Thank you so much for watching. I'm Ladi Williams. Bye for now.